Financial management. Finance is the lifeblood of any business. No business can work without finance. Over finance and under finance both are not good for any business. That's the reason why business unit require financial management. They take decisions that will maximize the wealth of the business unit. The importance of financial management has increased after 1950 at global level. According to F.W. Pyesh, in the modern economy based on the utilization of funds, finance management means acquiring of required funds at the required time. According to Raymond, finance means to take decision about financial matters, to implement them smoothly and to receive them. According to Professor Kimball, financial management means acquisition of fund, optimum utilization and its appropriate allocation. The characteristics of financial management. First, branch of management. Finance management is a branch of management which includes financial planning and controlling. Second, wide scope. The finance management has a wide scope. It includes acquiring finance, utilizing finance and distributing of income. Third is base of the managerial decision. Financial management proves to be the base of managerial decision. It provides its contribution in decision making for purchase, sale, etc. Fourth, relation with financial decision. It is related with decision making of capital structure, investment decision, dividend policy, etc. Fifth, goal of maximization of owners' economic welfare. Profit maximization and wealth maximization are the two approaches that helps achieving the economic welfare of the owners. So which are the two approaches of owners' economic welfare? It is profit maximization and wealth maximization. Sixth, key position. Financial management is a managerial activity and holds key position in organizational structure of business unit. Seventh, relationship with other areas of management. The other areas of management like production management, marketing management, personal management and so on, they are all connected with finance. So this is more flexible in formulating production policies, sales policies, etc. if the financial management has got the sufficient fund. Eighth is division into two parts. They are divided into two parts. Example, management of long-term fixed capital and management of working capital. Fixed capital includes planning for expansion of fixed assets such as building, machine, land, etc. while working capital management is necessary for your day-to-day expenses. Let us learn the objective of financial management. The main objective of financial management is to maximize the profit of the business unit. It also has to take care of all the financial matters of the company. We classify it into two parts, profit maximization and wealth maximization. The objective of profit maximization means maximum income to be generated. The investors buy the shares of the company so that they get dividend. In future, when the price of the shares go up, they may sell and book some profit. The earning per share should go high. The company should maintain the dividend rate through the years. Second is objective of wealth maximization. Net present value is known as wealth of the company. Higher the net present value of the company, resulting into high wealth for the investors. It is the concept of cash flow. Only cash flow is considered as a measurement and the accounting profit is ignored. Net present value of wealth is equal to present value of wealth minus investment required. So many experts including Professor Solomon preferred the concept of wealth maximization. They believed that if the wealth of a company increases, it will reflect itself on stock market. Let us learn the importance of financial management. First, estimation of financial needs. There are different types of finance required in the business: long term, medium term and short term. It is the work of finance management to estimate the various requirements and make its arrangement. Second is acquiring finance. There are various sources. Finance management must acquire finance from the source where the cost is minimum. Third is planning and controlling. Proper planning and effective controlling are to be combined so that economic utilization of finance can be made. Fourth, distribution of finance. The distribution is a very important function of management. Finance is to be distributed among all the departments in such a manner that there is adequate fund with all the departments. Fifth, maintaining liquidity. It maintains liquidity by preparing cash budget and cash flow statements. It helps in maintaining sufficient cash balance. Sixth, distribution of income. It makes decisions so as to what part of profit is to be given as dividend to shareholders and what part of profit is to be reinvested, etc. Seventh, management of current assets. Various current assets of business are debtors, cash, bank, bills, stock, etc. The finance management helps in maintaining the current ratio. This will help in investment policy of the business unit. Eighth, financial decisions. Finance management takes important decisions such as to dividend policy, reinvestment policy, preparing to capital budget, etc. Coordination between various policies is to be maintained. Ninth, raising credit of business. Finance management contributes in the success of business unit. It provides finance as per requirement and helps in managing the finance of the business. It maintains proper liquidity and maintains sufficient working capital. In other words, it raises the credit of the business. So from the importance, it is clear that not only acquiring of funds is important, rather its proper utilization is to be done along with the proper distribution of income.